Hello, everybody. I think we're live. Let me just double check. All right. So thanks for coming, everybody. I think I got almost 100 questions submitted just with the original registration. Then I know people are going to have more questions today. So just let me know where you are tuning in from so I can see that you guys can hear me. And I'm curious to know where everybody is from. I am broadcasting live from my office in Utah. So there we go. Oklahoma, Robert, Northern Virginia, Jessica, Austin, welcome. Okay, they're coming in now. It looked like there was a delay. So we have a ton of questions. I kind of wanted to review three main things. So the first was what type of business entity you need. I wanted to talk about how to keep track of everything. So the record keeping, the bookkeeping, the different options, and then where to start with taxes. So those are all pretty broad. And I mean, instead of going through all those will for sure be covered as part of the responses to the questions that I got and the questions that I'll get throughout the course of this. So I'm just going to go through the questions and I'm going to paste them into the chat so I can put them on the screen. So if you come back and watch this, you can see what question we're on. So hey, this is awesome. Ashley from Toronto, Jeremy from Colorado, California, Jim from Charlotte, Debbie's here, April from Georgia, White Lake, Michigan. Welcome, Colleen. Kim from Indianapolis, Chris from Tennessee, Bill from New Hampshire, Harris from Utah, Chris from Kentucky, David from Ohio, Poppy, South Carolina. I think I can catch up. Wynn from Maryland, Fridas from Florida, Gina from Philadelphia, Max from Washington, Cindy from Wisconsin, Marlene from Missouri, Debbie, California, Trina, Colorado, Carrie from Minnesota, Terry from Las Vegas, Cheryl from Kansas, and Luis from Houston. All right, first question. Welcome, everybody. So I cut and I copied these all into a document. So I'm going to be posting them in the chat and then adding them to the screen. So, and I apologize that when I transferred these, the names got detached, so I can't see the name. So they're all just going to say that they're from me. But this one says, could you clarify how to go about reselling your personal items, some that may have receipts and most that don't? So I have a YouTube video on this on my channel about how to account for personal items, because that's the question, right? So what's the deduction? Well, you deduct what you originally, you deduct the original cost. So the question is, well, what was the cost? And it was a personal item originally, you probably won't know what that cost was. So you'll need to estimate. Worst case scenario, maybe you can go back and look in your bank records, or maybe you'll have the receipt, but if you don't, you'll just have to estimate what you paid for it. And you can create a record of that estimate, and then that becomes your substantiation. It's not perfect, but it's better than nothing. And I'm just going to keep going through these different questions, but feel free to drop in your questions, and I'll just go back and forth from the ones that were submitted beforehand and the ones that you are submitting right now. All right, here's the next one. So how might one record and then organize travel expenses if you're going to another town for a day or weekend to source? So if the reseller lives in a small town and wants to travel a few hours to a major city or two and spend a weekend sourcing. So hopefully you have, and this is part of just getting things set up properly for the business and for your bookkeeping, but hopefully you have a separate bank account that you use for your business. If you're a sole proprietor, it doesn't even have to be a business account. It can just be a separate business or a separate personal account that you only use for business transactions. And then just use, or a separate credit card and link it all to just separate accounts. And then if you travel out of town, just make sure you're using that card for any lodging, any meals, any inventory you're purchasing, and then you'll have all those transactions separate. And if you're out of town and you're staying overnight and it's all business related, then those hotel stays or Airbnb stays are going to be deductible. Those meals are going to be deductible. Um, so yeah, it's really just a matter of keeping it separate and having it. Uh, and then you could take the next step of having that stuff imported into a bookkeeping program, or you could enter it into a spreadsheet. And I'll talk more about that in a second because I did get a lot of questions on bookkeeping. So go slightly slower because I'm pasting these in there. eBay bookkeeping. Do you count the shipping that the buyer pays in income? Yes. So there's the income that you receive for the actual product or item, and there's the income you receive for the shipping that the buyer is paying. Because a lot of times they're paying the shipping exactly what it's going to cost you to ship. But there are a lot of instances where the buyer will pay shipping and maybe it actually costs you less to ship it or it costs you more to ship it. So in order to record that discrepancy, you have to record the shipping paid by the buyer as income, and then you'll record the shipping paid by you as a shipping expense. And if they're different, the net difference will just either add to your profit or to your loss. Question I just got from Cheryl. So if we set up our bank and Amazon accounts with an EIN from the start, do we have to change accounts or just name when we get an LLC? Let me think about that. Um, so I don't think you have to change accounts. I think you're asking, does your business name or your LLC name have to be the same as your store name? And it does not. If that's not what you're asking, then let me know. So this was actually one of the first questions I was going to address, and I'm just getting it again right now live. So what bookkeeping programs do you recommend for startups on a small budget? For context, I'm 6 to 9 months from launching, so expenses only for now. Yeah, that's a really good and really relevant question, and I'm going to share my screen because I want to go through some examples real quick. So I'm going to present entire screen. Okay. So a lot of you, if you have been selling, you have probably, and especially if you sold on eBay, you've probably heard about GoDaddy Bookkeeping. So GoDaddy Bookkeeping got discontinued last year, which was a bummer to a lot of you because it was so simple, and yet it also integrated with eBay. So it was a really simple program. So one of the original founders of GoDaddy Bookkeeping has recently come out with this software. Is called Seller Ledger. I know some people have been learning about it recently. If you sell on eBay and your goal is simplicity, this is probably going to be a really good option for you. I recommend trying it out. I'm not an affiliate for them yet, or for any of these guys, but this is pretty economical, budget friendly, and worth giving a shot. Another one you might want to look at that's been around just a little bit longer is My Reseller Genie, and they've made a lot of improvements over the past year. I think it's going to be similar in terms of pricing and capabilities. They're not exactly the same, so you could try them both. Um, they're only $10 or $20 depending on what plan you get. They both integrate to an extent with Amazon, with eBay. I think these guys might integrate with Amazon. No, I'm not sure. Seller Ledger is working on Amazon integration. Another option, if your goal is simplicity, and there's not a lot here on the screen right now, but QuickBooks Self-Employed. So this is like the simple version of QuickBooks in that it only has income and expense accounts. It does not have asset, liability, or equity accounts, which is also the case with the first two that I showed you. But this one might be more limited in terms of integrating with eBay. If you want to go the next step up, you'd be looking at QuickBooks Online, and there are actually 4 different tiers of QuickBooks Online. You just need the most basic, which is called Simple Start. And this is for those of you who want to be a little more serious, who are growing. Maybe you need a balance sheet that shows you your assets and your liabilities and your equity. Um, if your sales are over 250,000 and you're a partnership or an S corp, you're required to show a balance sheet on your taxes. So I would probably encourage you to use something like QuickBooks Online, which I refer to as a full blown accounting program. Or if you want a free version of that that doesn't have as many integration options, you could check out Wave Accounting. Um, and this is another full blown accounting program. So it's got assets, liabilities, and equity in addition to income and expenses. And this one's free. But it doesn't have all the bells and whistles as something like QuickBooks Online. So you've got a lot of options, and it just depends what your goals are. If you value simplicity, or if you want more insights into your books, more integrations. So those are some options. And just a quick plug for a sale that I'm doing in about a week and a half. So for those of you who do want to use a program like QuickBooks Online, like a full blown accounting program that has journal entry capabilities, I have a bookkeeping basics for resellers course that is designed just for you. So if you are the GoDaddy or the seller ledger or reseller genie, this might not be for you. But if you are wanting to learn more about bookkeeping, a little more about accounting, but you don't necessarily want to be an expert, um, there's going to be my biggest discount of the year on this course in about a week and a half. So just watch for that. And I'll be posting a video more about this later. But let's dive back into some questions. Um, let's see, just making sure I didn't miss any. Okay, here's a good question. Is cashback points earned on personal credit cards and business cards required to be reported as income? So I just barely finished a YouTube video on this yesterday, and I'm going to post it next week. So I'm just gonna because the answer is it depends. Um, and I never feel like I explain it correctly just off the fly. So I have a video coming out on it next week, and yeah, the second part of your question. So I have in my firm what's called an annual package deal, where for those people who think they might have questions all throughout the year and they don't really want to have to pay for a separate consultation every time, I do what's called an annual package, and they're customized. So we might put in your individual taxes, your business taxes, maybe you want to form an LLC or an S corp. We throw that all in there, and it's just like a one-time thing, and you get exclusive access all throughout the year. I usually only take about 10 clients for that particular service. And right now, I think I only have 4 or 5. So I do actually have some space in there. I was going to actually send an email out about that. Um, so just shoot me an email on that. So, hey, Win, he says, can an LLC taxed as an S Corp have a personal savings account to take advantage of the higher rate as long as we don't mix personal with business? So the IRS doesn't care. They just want you to be accounting for things properly on your tax return. But an S corp is usually layered on top of an LLC. So you're still an LLC for state purposes. You have limited liability, liability protection. But if you're using a personal account, it can become a liability issue. Like it's not a bookkeeping or a tax issue, but from a liability standpoint, if anybody ever came after you, they could potentially penetrate that liability protection, because they could say, well, you're not really acting like a business because you're not even using a business account. You're using a personal account. So are you really a business? So it just introduces a little bit of potential risk. But if you never have any like legal issues, then yeah, it's just a risk that you would have to balance. Um, Question from Griffin. Is it necessary to keep track of discarded items when using the cash method for inventory? So I also have another video out there on the difference between two videos actually, the cash method or accrual method specifically for inventory. So cash method is just where you deduct it immediately when you purchase it. The accrual method is where it's the historically required method where you don't deduct your inventory until you sell it. So he's asking, is it necessary to keep track of discarded items when you're using the cash method? And the answer is no, not really, because when you purchase the item, that's when you take the deduction. So there's nothing you really have to track regarding whether you sell it or whether you throw it away. If you're using the accrual method, you'd have to track the timing of when it was sold or when it was thrown away because that would be the time at which you deducted it. Um, so this video will be available on YouTube. If I still don't know if it's going to be public or private. If it's unlisted, you can still use the same link that many of you got in your email, or it might just be public. I don't know yet. So here's a question about quarterly sales tax. eBay, Poshmark, and Mercari collected on our behalf. That's correct. Would we always be entering zero on the quarterly tax submissions? So this is a good question. eBay, Amazon, Poshmark, they're all considered to be marketplace facilitators. And I think pretty much every state that has sales tax now has marketplace facilitator laws. And those are laws that require those platforms to collect the sales tax and remit the sales tax on our behalf, on the seller's behalf. So that takes a large burden off of the seller. And most of us don't have to submit any sales tax returns because of that. But if you want to take advantage of not having to pay sales tax on your inventory, you can get what's called a reseller certificate that you present to or give to your manufacturer, your wholesaler, your vendor, and they keep that on file. And then they say, okay, since you're selling this, we don't have to charge you sales tax. But in order to get that reseller certificate, you have to be registered for sales tax. So you have to go tell your state, I want to be able to collect sales tax. Even though you're not collecting it, you're just doing it so you can get the reseller certificate so you can avoid paying sales tax on your inventory. I still haven't figured out a shorter way to explain all this. So anyway, if you are registered for sales tax, even though you don't have to pay it, they're going to be expecting you to submit sales tax returns. In many cases, those are quarterly. So the question is, would we just put zero? And the answer is, yeah, that's probably fine. If you want to be a little more technically correct, you could. So if you're in California, let's say, you would enter as your gross sales all of the sales made in California. And then down below in the deduction section, you would enter that same amount. So you're deducting the same amount you're putting as sales. So the result of taxable sales will be zero. So here's a good question. And I talk about this one in my Reseller Tax Academy course as well, because it is a little bit maybe counterintuitive and there's not a lot of good guidance out there on it. So how to account for consignment sales where you sell to a consignment store and they pay you when it sells? So yeah, or it could be the reverse, or maybe you're taking goods from someone else and you're selling their stuff. And then, yeah, it kind of depends how you look at it because let's just take the question. You're giving them stuff and they're selling it for you. And then Evelyn is saying that they pay you, but really you're paying them because they're just giving you the money that came from your sales and they're holding back a portion of it. And the portion that they're holding back is the commission that you're giving them. So even though it seems like they're giving you money, you're the one giving them money. That makes sense? So sometimes you think, well, do I have to give who has to give the 1099? And then you have to think about, well, who's the person doing the service? Anyway, how to account for it? I think I got off on a tangent. Um, I would just record what they end up giving you um, as your sales. I mean, there's like a technically correct accounting way to do it, but from a practical standpoint, like if they give you $100, just include that $100 as sales. That's a simple way to do it, and then deduct whatever the cost of your inventory was. Yeah, the answer is truly always it depends, which is why it's not a bad idea to educate yourself a little more. Join one of my courses. If I'm using Poshmark, whatnot, eBay, am I still required to file quarterly taxes? So it depends if you're talking about sales tax or income tax. So unless you're registered with your state with a sales tax permit, you don't have to worry about sales tax. For income taxes, you might have to make quarterly estimated tax payments, and that's because if you're self-employed, there's no one withholding income tax from your paychecks. So the IRS says, well, you have to do it quarterly, unless um, you've already had withheld a sufficient amount from a day job or maybe from a spouse's job. So that one just depends, just like we talked about. So Zero is another accounting program. It's pretty has a lot of similarities to QuickBooks Online. It's a full-blown double entry accounting system, so assets, liabilities, and equity. I don't like it as much, but that's just because I'm not as familiar with it. The interface is a little bit different than QuickBooks, but a lot of people really like it. So that it is one to consider. Okay, so let's see here. We talked about cash method for inventory. I'm just looking at the questions I got submitted. Okay, here's a good one. So at what level of revenue or specific circumstances would it be good to hire a tax professional versus handling myself with TurboTax? So this one I'm not someone who's gonna say that everybody has to go out there and get a tax, everybody out there has to go out and get a tax professional. It just, the more complicated your tax situation is, the more likely it is that a tax professional could really benefit you, that it could pay off, that you could save money, that what you save will exceed the additional cost. So then the question is, what complicates a tax return? So the most basic tax return you could have is maybe you have one W-2 job and that's it. So you can still mess that up, excuse me, but it's harder. It's pretty simple to do in TurboTax. You get your W-2, you enter the different boxes, and then the rest is just calculated for you. But then and one complication is what most of you are currently involved with or thinking about getting involved with, which is some type of self-employment. If you're a reseller, you're automatically considered to be a sole proprietor. And now you have a new schedule on your tax return called the Schedule C, which is where you enter your income and your expenses of all your different deductions. So then there's the question of what can I deduct? How can I deduct this? Can I deduct my meals? Can I do the home office deduction? Can I do mileage? Or what method of mileage of auto expenses should I be doing? All these questions. Maybe you have kids. Maybe you got married or divorced. Maybe somebody died. Maybe you have educational expenses or have a child with educational expenses. And those all introduce different types of deductions that you could potentially be taking advantage of that you may or may not catch or know if you're doing correctly in something like TurboTax. So that's kind of a long answer. Um, but typically, I feel like with my clients, almost all of them have a Schedule C. Most of them are resellers. Sorry. My prices, I feel like, are either average or slightly below right now. It's usually about 500 bucks for everything. And I don't feel like that's difficult to make up with the savings that I can help them realize. Here's a good one from Gina. We own our home. Are we able to deduct a percentage of our property tax? If so, this one has to do with the home office deduction. If you have an area or space in your home that you use regularly and exclusively for the business. So in this case, it's 1/6. What is that? 16, 17%. Then that means that you can deduct 17% of certain expenses. So that includes property tax. That includes your mortgage interest. That includes homeowners insurance. That includes your utilities, um, your state. No. I'm missing one. Um, you get to take depreciation. So that's for the regular or traditional home office deduction method. There's also a simplified method that you can just get $5 per square foot up to 500, 300 square feet. So that one caps out. But if you use this one where you use the actual percentage, that can be a really substantial deduction. So I'll talk about this one a little more. So I'm going to Liz, New York, maybe. Do we need it? Do we need to file some sort of paperwork 4 times a year if we make a certain amount of money? So that's a good distinction that I should make is that you're probably referring to quarterly estimated tax payments. And though it's not a tax filing, like the filing that we do once a year, they're literally just payments. Like you don't have to file a tax return. You can just go into the IRS website and make a payment. You just enter your contact info, so it's linked to your account. But the rule is if you're going to owe over $1,000 at the end of the year, then the IRS typically wants you to make estimated payments. And the exception to that is if you've already paid an amount equal to 100% of the prior year tax liability. Yeah. Um, yeah, and I always want to specify the cash method for inventory because the cash method, the overall cash method for accounting, that's pretty standard. That's typical. That's what everybody does. But then when you drill down and you talk about inventory specifically, historically the requirement was that you deduct it when it sells. Um, but with some of the laws over the past few years, it's changed. So now you can deduct it when it's purchased. It's still it's not very clearly laid out. So some people see it as kind of a gray area. So if you do have a CPA and you're like, oh, I just want to deduct all my inventory that I already purchased, they might push back against that. Um, but yeah, I have a couple videos out there that talk more about that. So again, I assume you're talking specifically about inventory, and so how can you switch? So if you're switching from the accrual method to the cash method, that means that you have a bunch of inventory on hand that you haven't yet deducted. So in order to switch, you go ahead and deduct everything you have on hand, and going forward, you deduct your purchases immediately. So there's kind of a big benefit to you when you go from accrual to cash, because if I have $10,000 of inventory that I haven't deducted yet, I'm going to deduct it all right now, um, and it's going to bring down my taxable income. But then going forward, when I sell that inventory, I'm not going to have any deductions to offset it. So it just evens out over time. So the benefit of the cash method is, I would say, just record keeping simplicity, because again, over time, you're going to yield the same deduction. Good job, Debbie. Um, and just as a tip, if you are submitting it just as a hoop that you have to jump through, sometimes they'll set you up as a monthly filer or a quarterly filer, and that just seems like overkill to me, especially if eBay and Poshmark, if they're the ones really doing all the work on that. So you can call your Department of Revenue and request to have them switch you to be an annual filer. And a lot of times they will switch you. So then you only have to do it once a year instead of um, so often. Let's see here. Are your courses helpful for brands that are manufacturing new products? Um, yeah, it would still be at least 90 or 95% applicable for sure. Because I also talk about, at least my tax course is a little more broad. I talk about a lot of the stuff we're talking about today. Um, best entity, sole proprietorship, S Corp, LLC, getting audited, all the different deductions, all the different types of tax, self-employment tax, income tax, sales tax. Um, and then in my bookkeeping course, um, yeah, it's really for resellers or manufacturers who want to do their own bookkeeping. So this one I covered in the beginning. If you missed it, you'll be able to go back and replay that. But I went through some of the more simple bookkeeping programs and then some of the more robust bookkeeping programs. And it really just depends on, you can try the free trials, you can try them out, see which one kind of is better for you. So Evelyn says, if you did a previous tax year yourself and feel that it was not done correctly, then the following year hire a professional. Can the previous year be corrected by them? Yep, for sure. Yeah, so a lot of times that happens to me all the time. I'll do somebody's tax return and then someone will say, oh, in last year, I'm not sure if it was done correctly, whether it was done by the taxpayer or by another professional. And they'll say, can you redo it or can you look at it? And I'll just say, yeah, shoot it to me and I'll look it over. And if something was done incorrectly, a lot of times it'll be pretty obvious. And if it's if it's worth redoing, then I would let them know and we can just submit an amended return. So here's a good point. So as a retired school superintendent, I'm very accustomed to accounting and taxes. Um, I'm still looking to get a tax professional. One mistake could cost far more than a CPA. And that is true. That's really true. I've seen that a lot. I mean, I don't want to say that's always the case. On the other hand, if you have all your ducks in a row and you feel like you have a pretty good system, it could be that a CPA would end up costing you more money. Maybe they wouldn't save you anything, but I would say in most cases, it's going to be beneficial. S corp versus a single member LLC in Tennessee. I was told there was no benefit of an S corp because of Tennessee's pass-through tax. There might still be a benefit, but it's true in Tennessee and a few other states, they impose some kind of business tax where they're directly taxing the entity itself, which usually isn't the case. But you're still going to have self-employment tax savings on the federal side. It just might not save you as much as it would in another state. So that's something you'd have to look at a little more closely. I just can't get QuickBooks set up. Can a regular bookkeeper set it up, or do I need one that knows about reselling? It depends. It's probably helpful. It depends how they have it set up. Because there are different ways to account for your sales. There's different ways to account for your inventory. And if they're just doing it the absolute simplest way, then you don't necessarily need someone who knows about reselling. But if you want to see your gross sales and your platform fees all in QuickBooks, then you probably do want someone who is at least semi-familiar with reselling and how your platform should integrate with eBay or Amazon or whatever platform you sell on. So if you're talking about the 500 that I mentioned, I just meant $500 for annual tax preparation outside of bookkeeping. So I do have a bookkeeping service that's usually more in the 300 per month range. So it just depends on where your business is as to whether that's going to justify that type of investment. So my general price ranges are listed on my website, so notyourdadscpa.com. I think just when you go to the services tab, you'll see that if you kind of want to see what my price ranges are. What if I work full time from my job in my office and the same space is used for reselling? Can I deduct that? If you work from home for your day job, like W-2, and you also use that same space for reselling, then unfortunately you cannot use that space for the home office deduction because it's not used exclusively for your reselling, which is one of the requirements. So Raquel says, I have a domestic partner and one dependent. In general, is it better to file jointly or separate? So in general, it's better to file jointly. There are some cases where it can be more beneficial to file as separate. But yeah, if you're married, if you're married, it's typically better to file as married filing jointly. So what other common deductions can you take? Internet, gasoline, auto insurance, rent, etc. Pretty much any expense that you incur that's related to your business is going to be deductible or at least partially deductible. Most of them are going to be fully deductible. There are a few deductions that are a little bit tricky. Like if you have a meal that qualifies for deduction, then actually only 50% of it is deductible. Or to deduct auto expenses like gas or auto insurance or maintenance, you have to first decide, are you going to use the mileage method or the actual expenses method? So you can't deduct both. You can either deduct your business miles, depending on how many miles you drive for business, or you can deduct your actual expenses, which include the business portion of your gas, maintenance, insurance, but all the normal stuff that you incur on a day-to-day basis. So your office supplies, your reselling subscriptions, your business-related business conferences you go to, overnight stays on out-of-town sourcing trips, all that stuff is deductible. Home office deduction. It's always good to be thinking of that. Or if you have a question about something, then I mean that's you come ask a question here or post it on my Accounting for Online Sellers Facebook group. So here's a question: can I deduct inventory I bought prior to incorporating and paid from 2022? Um, yes. Yep. So you typically would just deduct that in the year that you started business, either right when you start the business, or if you're using the accrual method for inventory when you eventually sell that item. So, vehicle question from Elizabeth. She says, "Can you take a vehicle depreciation deduction if you're also using the standard mileage deduction, or do you have to use actual?" Yeah, so depreciation would be part of the actual. I forgot to mention that one. So that can be pretty significant. So it depends how much you drive the car, how expensive the car was. That will determine whether or not that's the better way to go. Because if you never, yeah, I'll just leave it at that. Okay, here's one that I did want to cover. When does it make sense to have business set up as sole proprietorships, LLCs, S corps, or move from sole prop to one of the other formats? So there's nothing wrong with staying as a sole proprietorship the whole time. Most of the small businesses in the United States and probably Canada and other countries, well, I'm not sure about that, are sole proprietorships. But if you do eventually change to something else or upgrade, as I like to say, the typical progression would be to go from a sole proprietorship to an LLC, which is a limited liability company. And then if you take it a step further after that, it would be to go from an LLC to an S corp. So you are a sole proprietorship by default. A lot of times I'll get questions or emails. I think I have some questions here about that. Is, what do I do to start my business? It just seems so overwhelming. But there's not actually that much you have to do, because as soon as you set up your store on eBay and you start selling stuff with the intent to make a profit, the IRS considers you to be a business. They consider you to be a sole proprietorship, and you should be recording your income and your expenses on your taxes and just on your own books for your own personal benefit, so you can see how the business is doing. Um, and typically, yeah, that's okay. But let's say you maybe want to work with a certain bank or vendor or wholesaler, and they might not work with you unless you're an LLC, or maybe you're selling something that's a little more um, risk, that has a more of an element of risk to it, and you want to be protected. Then an LLC is what you need to do, because it's specifically to give you liability protection. But the reason I like an LLC is because it puts you in a position where you could eventually become an S corp. You can't go straight from a sole proprietorship to an S corp. You have to have something in the middle. So you become an LLC, and then you can do what's called elect S corp status, um, which means that the IRS now taxes you differently, but you're still an LLC for state purposes. And the different way that they tax you is that they're not subjecting your profits to self-employment tax. And that's something we haven't. I can't believe we're already 45 minutes in and we haven't even mentioned self-employment tax. So when, as a sole proprietorship, as somebody who's self-employed, your profits are typically going to be subject to self-employment tax. Now that's a tax that's in addition to the regular income tax that you're probably already used to paying. And in the United States, self-employment tax, it basically takes the place of the payroll taxes, the Social Security and the Medicare that you're used to seeing taken out of your W-2 paychecks. But as someone who's self-employed, you're now paying the um, the what do you call it? You're paying the employee and the employer portion. So you're basically paying double. So it's 15%. So as an S corp, your profits are not subject to that 15%. So, I mean, it can save you easily 100, no, it can save you 10, 15, $20,000 year after year going forward, depending on how much you're making. So in the point at which you should at least start thinking about that is when you get up into the 30 to $40,000 of annual profit. It's not a definite yes, go form an S corp, but it's an at least start thinking about it. Here's a good question. So, which is better? Which is better? Several businesses under one corporation or a different corporation for each business? I'm going to replace corporation with LLC. 'Cause typically, that'll be better. It just depends. That's more of a, if you want everything to be separate, have its own separate liability. Like if you have everything bundled under one LLC, in theory, somebody could just sue this top LLC and I think come after everything beneath it. But that's not as much of a risk as if you're just selling clothing or something. A lot of times people will make a separate LLC for different real estate properties because they don't want somebody to be able to come after all of it. They want them to be limited to just one. And this question might be more on the legal side for somebody else to answer, but there's a lot of different ways you can set things up. So the IRS has a rule that says if you show a loss, which means your expenses exceeded your income, if you show a loss for the last or for 3 out of the last 5 years or for more than 3 years, in theory, they can come and reclassify your business to a hobby because they can say, okay, you keep losing all this money. Are you actually, trying to run this business for a profit or are you just messing around because you enjoy it? And if they do come in and say it's a hobby, then that basically means they can disallow all of the deductions that you have taken in prior years, which means you're going to owe a lot more tax. But this is one a lot of people get a little nervous about, but I've never seen this actually happen because if you can show that you are a business, then they're not going to do that. They'll say, "Oh, okay," because a lot of businesses lose money for a lot of years. But if you can show them the bookkeeping, if you can show them you have your business properly set up, you have a separate account for the business, bank account, credit card account, you're doing your bookkeeping, you're not being sloppy, they'll say, "Okay, you're fine." Ooh, here's a good one. This is one that was submitted before. How do you decide what to pay yourself? Is it even necessary to do? So one requirement of an S corp is that you have to pay yourself a salary through payroll. You have to give yourself a W-2. But for most of you, your sole proprietorships or maybe single member LLCs, it's not required that you pay yourself. First of all, if you're talking about an actual paycheck, you're not supposed to pay yourself. If you do take money out of the business, what you're supposed to do is just take a distribution. And that's just a simple bank transfer from your business bank account to your personal bank account. It's not a deduction. It's called a distribution. It's an equity. You're basically pulling out equity. It reduces your equity. So you are taxed on your profit that your business generates, regardless of whether or not you pull that money out. So if on paper I made $10,000 profit, even if I leave that in my business bank account, I have to pay tax on that 10,000 of profit. And then let's say next year I decide to pull half of that out. I take out $5,000. I'm not taxed on that 5,000 because it was already taxed. Okay, let's see here. Here's a good question from Virginia. eBay reseller with an LLC that I'd like to drop and go back to sole proprietorship, mainly because California charges the infamous annual fee of $800. Is this a good idea? It might be a good idea. So one mistake people sometimes make is even before they start selling, they'll go out and form an LLC or maybe even an S corp or maybe even worse, a C corp. Um, and then they learn that if they're in California, all of a sudden they're paying this $800 fee just for having an LLC. So that's the most expensive fee in the country. Um, who else is up there? Massachusetts, $500, something like that. But some states are like $20 or $50. And then you're like, oh shoot, I'm not even really selling this year, or I only made a few sales, and here I am paying $800 for the LLC. So maybe in that case, yeah, it doesn't make sense to be an LLC yet. Um, so yeah, if you don't have any specific reasons for being an LLC, I would just you file a form, an LLC dissolution form with the Secretary of State, and then it's done. Does the sales exempt apply to inventory purchased in another country? That's a good question. If uh, I don't know, maybe. Because I sell on Amazon and I get my items from China, and they did ask me for my sales tax information, and and I assume they wanted it so that they could keep it on file to maybe prove that they don't have to charge me sales tax. But I mean, that's only if Japan actually has sales tax. I don't know. I don't know if all countries. I guess I assume they all have some form of sales tax. So I would have to do more research on that one, Evelyn. Yeah, Angela, I am trying to go through the questions submitted in advance as well. Um, but the names got detached from the questions. So one about deducting loan payments as expenses. Okay, maybe this is yours. I'll take this one. I'm a new reseller who purchased inventory to start my business with a low interest loan. Will the loan payments I make count as a business expense for tax purposes? Um, yes. Yep. Yeah. So if it's a business loan, you can deduct the interest as interest deduction for your business. But if it's interest on a personal loan or for a loan that you were using for personal purposes, then that interest would not be deductible. Do I have to be an LLC in order to take deductions? No, that's a good question. You can just be a sole proprietorship, which again is what you are by default. Um, yeah, and that's a misconception out there. A lot of people would say, "Oh, I want to do an LLC so I can take more deductions." And the surprising thing in some cases is that there's really no difference between an LLC and a sole proprietorship as far as what you can deduct. If we source in Canada, can that be deducted too, or can it be US? Yeah, you totally deduct it, deduct it. Again, I get my stuff from China, and that's all inventory deduction, and I deduct the shipping and whatever else they charge me. Can you deduct 100% transportation cost of Uber and public transportation? Yep, I would just put that stuff under travel. If you're driving your own car, that would go under auto, either the auto expenses or mileage. If you're renting a car or taking Uber or public transportation, deduct all of it and just put it under travel expense. So if you incur business expenses in 2023, but you don't launch until 2024, then most of those are going to be what's called startup or organizational expenses. And the IRS says that you can't expense those until you start the business. So you would deduct those in 2024. And there's also a few more rules around that as far as how much you can deduct. Um, but the main thing is, yeah, you wait until you're open for business. Ooh, we haven't even talked about the 1099 stuff. I can't believe that. And we'll probably go for 30 more minutes. I mean, we have plenty of questions. It's really just how long can my voice keep going? Okay, thanks, Beverly. She says, if you sell on eBay part-time and sell your own clothing or household items, but will get over $600 and get a 1099, does that mean you have to file a Schedule C if you want to deduct the expense? Yeah. So there's a few things here. If you sell over $600 worth of, or if you make over $600 worth of sales on eBay or wherever, um, the payment processor is required to send you a 1099 if it was over $600. So before it was $20,000 and 200 transactions. Now $600 was supposed to go into effect last year. Now it's going into effect this year, in theory. Um, so you will get a 1099, which means that the IRS gets that information as well. So if you don't include it on your taxes, they'll likely send you a letter and say, hey, we noticed you didn't include this $600 on your taxes, and now you owe us $200 for the tax. And you're thinking, wait a minute, but that stuff cost me $1,000. Really, I generated a loss. So I think that the easy way to do it is, yeah, include it on your Schedule C. So maybe put the $600 of income, and then you'll deduct the cost or your best estimate of the cost as your cost of goods sold, so that you show a loss on there. The IRS also has some kind of more complicated workaround instructions for this, because a lot of people, maybe they sell a couch on eBay. They're not resellers. They just have this couch. They sell it to get rid of it. Maybe it was $700. So now all of a sudden they're getting a 1099 and they're like, what the heck? I have to report this? Like, I sold it for way less than I purchased it for. For those situations, the IRS, if you just Google like 1099 IRS personal items, they have some instructions. It's basically the same thing. They say, okay, go to 1040 line, I don't remember what, and enter the income, and then go to this other place and enter a deduction for that. So it just neutralizes itself. It's really a workaround because they don't have a great solution, because it's kind of a mess. So that the IRS computers don't flag that. Because if they get a 1099 reported with your information and their computers don't see an amount similar to that on your taxes, it's going to flag it. And it's going to be a mess, because there's a lot of people out there who are not used to getting 1099s, who have always been below that $20,000 level, and now it's $600. Okay, I'm trying to find out where I was. Here we go. How can you deduct maintenance on a car used for personal and business? So when you enter, it depends what program you're using, but typically you'll have to enter your mileage either way, even if you're using the actual expenses method for auto. You'll have to enter your miles. So you'll have to put, okay, my business miles were 100 and my total miles, including business and personal, was 1,000. So then they're going to calculate, okay, your business miles were 10% of the total. So then they'll take 10% of the maintenance, 10% of the gas, 10% of um, repairs. That's how they do it. They base it on the mileage percentage. Okay. Have some repeats. Yeah, so I mentioned this a little earlier. So typically, when you get up to that $30,000 to $40,000 of annual profit, that's when you should start at least thinking about if an S corp will make sense for you. Um, yeah, come back and watch this. Hopefully, me putting the questions up on the screen makes a little more helpful. Um, Okay, Cheryl, we'll see if we can get this. This is a clarification. If my business bank account is set up under an EIN, can I create my LLC with the same EIN and have a minimal amount of change? Hmm. If my business bank account is set up under an EIN, so when you originally get an EIN, there has to be some name associated with it. It's either going to be your name as a sole proprietor or it's going to be the name of an LLC. So then if you set up an LLC after the fact, I don't think it can go back and take that first EIN because it's already associated with something else. I think. I'm going to give you a 70% confidence level on that one. I'd have to double check. All right. So yeah, if you if you want to do a super chat, that would go toward education and training because this is an educational um, interactive workshop, class, webinar, whatever you want to call it. So that is much appreciated. All right, lodging. If I used credit card miles in the past for hotel rooms during sourcing trips, oh, that's a good question. When it comes to miles, so I have a video coming out about cashback rewards, a little bit about miles. I don't specifically get into this, but I do mention and I show a document where it talks about how the IRS, there's so many complexities to this stuff that the IRS basically says we're not going to look at that for now. What I would do if I were you is I would, and I actually have done this, I would go ahead and deduct it. Um, so if you have a business bank account, I would just transfer the equivalent of the cost from your business account to your personal account. Like you're reimbursing yourself. Like the business is basically paying you for the miles that it used. But yeah, ultimately I would deduct it for sure. Okay, this one, I'm hesitating, but I'm just gonna tackle it. So, Leanne says, we have an S corp. We just purchased a vehicle on a personal loan. The vehicle is used about 75% of the time for the business, 25 per personal. then we deduct depreciation and interest. So the easiest thing to do would be to have the S corp reimburse you personally for the business miles. That's if you use the mileage method. If you want to use the actual expense method, either, and I some CPAs might not agree with me on this, but either the the business actually has to be the one that purchased the car, and then you can take all those actual expenses and depreciate it. But if it's in your personal name and you want the S corp to use the actual expenses method, um, the business would have to reimburse you personally for all those actual expenses, and it would have to reimburse you for the depreciation. So that's an actual transfer of funds. And with autos, sometimes you can depreciate the whole thing in year one. So I don't know, that could be $50,000. So you would actually have to reimburse yourself that $50,000 in order to deduct it. And I hope to put together like an article or something on that because that is a kind of a nuanced, common question with a nuanced answer that I get occasionally. Um, so here's one I got that kind of has to do with some of the LLC stuff we've talked about. So someone said, can I use a personal bank account for my LLC because I get a higher interest rate? And I said, yeah, you can. The IRS doesn't care. But if you ever get in trouble or anyone ever comes after you, and I didn't use this word, but they can do what's called pierce the corporate veil. They pierce that liability protection because you only have that protection, or that corporate veil is only protective if you're acting like a business, if you're following the rules. I mean, not the rules, but if you're acting like a business. And that just means having your ducks in a row, like having a system for bookkeeping, not mixing personal and business. Um, maybe even having a board of advisors and like annual meeting minutes, even if it's just like a Google Doc. If you stay in a condo with others while out of town and you use your time to source inventory, can you write off a portion of your condo as well as a rental vehicle if purchased by you? Um, so I mean, there's a whole range. It just depends on how aggressive you want to be. So my rule of thumb is if the primary purpose of the stay was for business, then you can deduct all of the travel to and from that condo. And if you're sourcing every day, if you're doing business every day, or if the primary purpose of each day you stay there is for business, you can deduct the full cost of the lodging for each night. If the primary purpose of the stay was not for business, then you cannot deduct the travel to and from that location, from your home to that out of town destination. But then you can split up the days. So if 3 of the days were for fun, but 3 of the days were for business, then you can deduct the lodging for those 3 days and the travel for those 3 days. So it just depends. Um, I mean, if you have a few friends and you're all into reselling, then that's a really good way to get some, have a girl's trip or a guy's trip and go book a house somewhere. And I would feel comfortable, deducting all of it. one of the benefits of having your own small business. So I mentioned a few in the beginning. I'll just mention a few right now as far as bookkeeping. So a lot of it depends on your comfort level. You could do something as simple as a spreadsheet, especially if you're just starting out. Eventually, that might become a little bit tedious, and you might want to upgrade to a simple bookkeeping program like I mentioned Reseller Genie. I mentioned Seller Ledger. That's kind of the new GoDaddy bookkeeping. QuickBooks Self-Employed. Those are all income and expense, simple online bookkeeping programs. If you need something a little more robust, you can use QuickBooks Online. You can use Wave Accounting. Zero is another one that was mentioned. And if you're using one of those, I also mentioned at the beginning, I'm doing my biggest sale on my bookkeeping basics course for resellers in about a week. That's specifically for people who want to try and learn to do their own bookkeeping if they're using one of those more robust programs. So check that out. And as part of that, I haven't mentioned this yet, but I also have. Do I want to mention that? It's just I don't have. I'll go back to that. Here you go. Would forming a foreign LLC in Delaware when selling in California be beneficial? No. So Delaware is a business-friendly state for some different reasons, but mainly it's going to benefit corporations like large C corporations. Um, yeah, you don't want to. Yeah, don't. Typically, you want to form an LLC in your own state because if I'm like, oh, uh, I'm going to file an LLC in Delaware or in Wyoming because it's super cheap. Um, I'm kind of shooting myself in the foot because if I live in Utah and Utah finds out that I have an LLC in Wyoming, they're going to say, well, you live in Utah, you're operating in Utah, so now you need to register that LLC as a foreign LLC in Utah. Or in this case, they're going to say, California is going to say, you need to register Delaware as a foreign LLC in California. So now you have two registrations that you have to pay for annually. So there's typically no benefit. You're just um, creating more work for yourself. Here's one we haven't talked about. How do you deduct a new cell phone? So if you use your phone, you're going to have to do an estimate, but if you use your phone 50% for business, you can deduct 50% of the actual cost of the phone and 50% of the bill each month. Here's another one we haven't touched on. So what do I need to consider from a bookkeeping and tax perspective when hiring and paying children as models? I have a friend who he gets a lot of different types of clothing or swimsuits or like leggings, and he's got a bunch of kids, and they've taken trips to the beach in California, and they write off the whole trip because he takes pictures of his kids playing on the beach, and the actual specific purpose of the trip was so he'd get these modeling shots. You should consider your kids to be actual employees rather than contractors because children who you hire as your employees are not subject to payroll taxes. And if you pay them less than about $13,000 or $14,000, which is the amount of the standard deduction, that would wipe out any income tax they would have to pay. So they're not going to be subject to any tax at all, and they won't have to file taxes. So you get a deduction for your business, and they don't have to report any income tax. So that's a really good strategy if you got kids. Um, all right, you guys are Some of you are still holding strong. Some people dropped off, but again, you come back and watch this with the link. I don't know specifically if Florida offers any specific benefits. I don't remember how. Yeah, I don't know off the top of my head. So a lot of this, I would say most of this is covered in my Reseller Tax Academy course. Again, the bookkeeping course, which the sale is next in about a little more than a week. That's more bookkeeping specific. So, and then let's see. Here's one that was submitted beforehand. When do I need a business license? So I probably would not worry about a business license. They weren't originally designed for people who are, operating reselling businesses out of their houses. If you go out and get one on day one, I think you're just creating more work for yourself. And maybe this isn't the technically correct answer, but a lot of times if you go and form an LLC, then you'll be on their radar and they might send you a letter and say, oh, by the way, we noticed you're not signed up for a business license. Go do that too. So I'm like, I'm going to go do that when they tell me to. Otherwise, I think it's overkill. Just reading through some of the questions, seeing if there's any we haven't got. And in some cases, your city or your locality will tell you if you need to get a business license. Some places might be more strict than others. So I'm not going to say don't go do it, but kind of figure out if you actually have to where you are. If I'm a dentist or something, there's obviously some professional licenses that I need. And then if I have my store there on the corner, I most likely need some kind of business license with the state to operate as a dentist, but that's just not how it is for resellers. Yeah, that's what I figured. Okay, Miles. I We're coming up toward the end, so I'm gonna see how many I can get. Can you just make a list of miles taken from address to address? Um, yes, I think so. So the easiest thing to do is just get an app like Mile IQ, and it pretty much just tracks it all for you. So parents don't have the same benefit as employees as kids do. So I would just hire them as regular contractors. And they don't have to be part of the LLC agreement or anything. You just give them normal bank transfers or checks or however you want to do it, pay them through PayPal. You take the deduction and then they would report that income as self-employment income on their tax returns. So selling on Shopify, if you're talking about sales tax, so for some reason, Shopify is not considered to be a marketplace facilitator. So they don't take care of sales tax for you. So you have to set that up on your own. But you typically only have to pay sales tax where you have nexus, which means a physical or economic presence. A physical presence is typically where you live. So typically, you're just going to set it up to collect sales tax for the sales to customers in your same state. And that 95% of the time, that's all I would worry about. Paying your kids resources, is there a basis for their wage? I don't think so. The IRS doesn't care. Who the body that would care about that is the Department of Labor, maybe in your state. But typically, if it's your own kids for a home business, that's nothing I've ever seen them really like enforce or come after. So I wouldn't get too hung up on that stuff. Any benefits to placing LLC in a trust in light of the new BOI form the government is requiring 2024? I don't know about that one. Yeah, I'll have to look at that. I'm not familiar enough with that yet. So this is a good question. If you sell an item 1 month, but the payout is in the following month, which month do you record the sale in? So this one comes down to a principle called constructive receipt. And I don't know if there's any official guidance out there. It just has to do with like if you it says like if the funds are reasonably accessible by you, then that counts as income. But if somebody's holding it back and you can't like withdraw it yet, then that is not considered to be income. For the most part, for me, if the like I consider my Amazon account basically to be another bank account. So once they say I have income in there or sale, I just consider it to be income. I don't think that has to be true for everyone. I think what matters is just that you're consistent. Because some people just, I think another acceptable way to do it is just to include your payouts as your income. So even if you've made the sale, if you have the practice of just in your books only counting in as income what has been paid out to your bank account, I think that's okay too. So I think there is some flexibility there. I don't know if I don't think Square is a marketplace. I think Square is more of a payment processor who will send you a 1099. Okay, a couple more. Couple more. Um, so I'm gonna go ahead and do this 4-part question that I got. I don't even know if it'll all fit on the screen. It doesn't. Okay, I purchased 5 items from a retail store to resell. Number one, what's your recommendation on next steps to process the receipt? So if you get a receipt, I would recommend storing it somehow. Typically, well, that's not true. I would say take a picture of the receipt or scan it with a scanning app and put it in some digital folder on your computer or on Dropbox or in Google Drive that you just throw all your receipts in, maybe for that year. And then throw the original away. And you most likely won't have to worry about it ever again. So number two, data entry items purchased from the receipt, any particular software recommendations or spreadsheet, what are the minimum requirements? Um, yeah, that has to do with like the bookkeeping piece. So if you're using a spreadsheet, I would enter that purchase on the spreadsheet. If you're using any one of the bookkeeping programs that I've talked about, that purchase should be or will be imported into the software, and then you'll just have to classify it as inventory or as office supplies or whatever it was. So how to track mileage, I've talked about that a little bit. You use MileIQ, an app, and then what to do with your receipts afterwards? Yeah, scan them. So hopefully I covered all those. Um, and I got most of them. Most of the questions I've looked at, we answered some type of similar question. Just making sure. All right. Yeah, I think I was trying to scan my questions, and then I feel my mind just sort of slowing down. So that's my sign that maybe we're about at that point. So I appreciate everybody coming. I appreciate the questions you submitted before, in, during this live. If you want to do it again, just send me a message. Maybe we'll do another one soon. And got a new video coming out in a few days. So I'll talk to you guys later.